even when Canada was up, I don't know, 80, you could only take Aussie down 30. I'm not saying this is a low, but I'm saying that it has a better structure. And for a fade on a break to new lows, maybe the low 66s to 65.30 are some numbers I have. But, if the metals are good and China's getting closer to a reopening, I still think this is the one to be uh, looking for. Any thoughts on Aussie, guys? Across
Yeah,
the board, Stel, everyone. Go ahead,
yeah. Still,
Brian.
he's on the metals, obviously, but Aussie's, metals going up and Aussie's going down. That's never a good sign, is it? Same with the Kiwi.
Yeah,
Shows you what's playing, and that's the risk trade at the moment.
yeah. Okay. And then risk. So we talked about this yesterday. Um, and they came off pretty good, actually made a new low. S&Ps took out the prior day's low. And they're not my numbers, but a couple of guys that I follow that I like. A week or so ago, we're talking 37.80-ish, and then a decent pop. So see if that develops. Uh, you know, they're actually looking from down here to maybe another rally towards 42. So we'll see. Um, there is an awful lot of bearishness, and you know what? Someone made a great point about sentiment in the market now, because down here sentiment was bad, and here, and they're saying that sentiment to fade risk when it's risk off only works in a bull market, right? So people are used to every time, but we never got this bearish, and I will agree with them for the long term it doesn't, but tactically for swings, I mean, this was a pretty good tactical buy in a bear market. This wasn't bad. And, maybe we're getting close to something here. I'll also be paying attention to the bonds here. Um, the long end is not as firm as the short end. I mean, the 2 years are getting closer and closer to 4, right? But I look at the TLT here, and I wouldn't be short bonds here. Pretty glaring divergence. Uh, Bonds have been hated for longer and much more, like 10 on the DSI for a long time. It hasn't gotten above 20 in months. So I actually think there's some kind of spec buy here. And I said that last week, but later in the week, it looked like we could get one more low for a 3 into the Fed, and it really didn't even wait for the Fed. So here was a stop hunt under 106, and we'll see. The whole world is short or bearish bonds. I'll take the other side.
Well, there has been good rationale for that, right? Good morning, guys.
Good morning, Stel.
But you're right. Now is, if you don't have a position, I don't think it's wise getting short. Definitely not ahead of the FOMC. I don't see what Powell is going to change really in what they deliver. I think they're going to do 75 and maintain kind of the same rhetoric. But the time to be short bonds was a while ago. Same as the time to be long dollars.
Right.
But we wait to see what happens. Now, you did mention the Aussie, the Kiwi, commodity currencies, and metals, and we're seeing a divergence today. I'm going to attribute it to the fact that it's just FOMC day. You're seeing the Aussie, Kiwi, Canadian, Norway, all that retreating as the dollar. The dollar's rallying. Okay, yeah. Yields are a little bit softer today, but you have gold up, silver up 1.5%, platinum 2%. So there, metals are diverging. Don't know what this is on the back of. Sorry?
They took off from Russia, right?
Yeah, but
you have to put something in your drones to make them work, and silver for one, and perhaps gold is a hard asset. In wartime, people buy hard assets.
And that is silver. True. So the silver correction looks pretty simple, little ABC, and looks like we're going to make a new high for the move before we get a correction. So gold, I don't know. You think there are a few stops over 1680 now?
Well, mine is.
Yeah. Okay. Yeah.
Yeah.
So I mean, you were saying yesterday made you nervous how many times it's testing
Yes.
this,
Yes.
and here we are again. So you have to be even more. Well, why be nervous? Your order's in.
Yeah, no, the order is in its half position. On the other half, we've done okay. So
Yeah.
it is what it is. I don't know.
Were you
No,
tempted yesterday to book the second half?
I was tempted, but I didn't. In hindsight, maybe should have.
You're so disciplined. It makes me sick. I can't. You know, being undisciplined helps you sometimes. You know, you do it like an impulse thing, and it works out. Usually on exits, it works out better because you have to plan the trade. But in entries, no, impulse, forget it. I've done 1,000 of those. So, okay. So,
well, let's see. Let's see what we get from the Fed. I mean, as I said before, I don't see how we're going to get something different. So theoretically, we should see risk being sold, bonds being sold. But again, on the 10-year US, we're so close now. We're at 352, which is basically the point of the breakout point. So until we get the Fed and we get that out of the way and the market reacts to it, I'm not going to make any decisions on that. But yeah, you know, if anybody knows what Powell is going to do, I'll be very happy to learn it.
So the gold silver ratio.
Go ahead. I was going to jump in there.
Silver ratio. Good morning, Blake. Besides it being, you know, an important level, you're having, you know, moving averages converge on this. And should we start closing back under 83? You could take another 12 out of there and you're headed towards 70 on the gold silver ratio, just a measured move. All right, Blake, I'm done.
All right, well, good morning, everybody.
Good morning.
Happy FOMC day.
Yeah.
Hey.
We'll see if it's going to be happy or not.
Well, yeah.
Well, let's be happy no matter what.
Let's all cheer on the Fed and the very tough job that they have ahead of them, forging the human race forward in a high inflationary environment. How about that? I'm just making crap up now, but you know, I'm going to go in by saying that we have gold that's trading up at getting close to that 1680 level. This is a big breakdown point. And what do you guys make of this? You know, I know we had some comments from Putin overnight, and you know, is this a fear trade that's happening right now? This gold move. What do you guys think over there? You guys were awake in Europe. I was asleep when.
I mean, it partially is. I mean, for the reasons I just explained before. I mean, in times of uncertainty surrounding a possible war or whatever war, how you call it, those are the kind of assets that get bought. And I'm surprised sugar is not higher, but no, that's a half a joke. Can I just say something on Dale's comment about TLT? I think, Dale, there is a possibility that they are coming your way on the longer end of the bond market, and that will depend on how big the difference will be on their how big the gap will be on the dot plot tonight, because they will be forced to put the short end higher, but the long end, they may create a bigger gap, in which case the yield curve should invert further, and that may put a bit under your long end bond market. Just a thought.
Yeah, okay, so everybody's going to be looking to see what the dot plot looks like past 2022, right? I mean, that's what really matters at this stage, because we're going to get 75 basis points. Chances are we're not going to get a full percentage point. I mean, that's just, you know, facts, right? And so then what does the market focus on? It's going to be the dot plots, and it's going to be how bonds react. I mean, that's it.
Just put it in the.
It's all about future expectations.
Yeah. Yes. Good morning, Steve.
Good morning.
That's where the dot plots are going to come into play. So what did you say, Ryan?
Yeah, I'll just say I just put the dot plot in the newsroom. If you wanted to show that on the screen here.
Yeah, here's our, here's the ForexAnalytix chat room. Here's the news and research room. Let me get over there. That's the dot plot that we're looking at right now. And so where, 2023 and 2024 look is going to be, that's going to be what's really important. This one right over here that's up at 4.5 or just sub 4.5.
Yeah.
4.5. That we don't want to see anything. We don't want to see any more dots up there, right? So
you're gonna get them.
What?
You're gonna get them, I think.
Yeah, that means that's going to mean what? That's going to mean the dollar is probably going to rip. So that's what I think people are going to be looking at today. They're going to be looking at those moves. Now, you were just talking about, Dale, you were just mentioning, here's the euro nearing. Now, this is pretty key support. And I'm actually surprised, and you guys know this, I'm not, usually when there's a big event, we tend to go mid-range. And right now we're at the bottom end of the range of the euro at this moment. And I'm actually surprised it's trading as weak as it is. Now, I have to also say that sentiment is pretty weak as well. So that's something else to factor in. But man, this euro is weak. And what do you guys make of this? Because like I said, usually, you get into a big event like the FOMC where everybody's like, okay, I just going to take everything off the table and I don't want to have any exposure. Usually you end up kind of like right in the middle of a range. If this is the top end of the range, there's a lower end.
Yeah, Blake, but we've had something overnight that made sure that we're not going to stay in the middle of the range, right? The potential escalation from Putin's side pushes even further the US dollar as a safe haven at the moment, right? Because it's far away from the epicenter.
Right. No, that's the point I'm trying to make, is that we had something push us. So now, as a trader, what do we do? Because if the dot plots come in more aggressive and we have to start looking further out, and we're like, okay, this terminal rate's going to be a lot higher. Is this the actual catalyst that finally breaks us down?
From a risk reward perspective, I see the argument for somebody to say, oh, something, I'm going to go against it here. I'm going to go long against the previous low. I mean, it's a good risk reward. There's no question about it. But everything in me tells me that, and I said that yesterday as well, is that either immediately after the FOMC or very soon after an initial reaction in the opposite direction, especially now that we have the potential of further escalation in Ukraine, I think that both risk assets and the dollar are going to resume their prior course.
So what I've been saying from the Kissinger interview, and I also asked Harold Malgrim about Putin's doctrine, and they both said, I heard Kissinger say that Putin de-escalates by escalating. Escalation, then de-escalation. So definitely escalating, and who knows, desperate men do desperate things here. So we're entering a new stage in this war, aren't we?
That's funny you say that, and I get exactly what you're saying. A lot of people believe that exactly what you said, that he's escalating to de-escalate, that this might actually come to some sort of stalemate. So yeah, that is what I find interesting about your statement and what everybody's attitude towards Putin is right now. And I don't have an opinion, and I'm no Putin expert. I just take the facts of what we have
even
ahead of us.
Putin's not a Putin expert.
Right. Yeah. But the one thing that I have to identify, and I think that we all have to notice here, is that and one of the other things, and Kman, Ryan, you guys have been around. Stelios, you guys have been around a long time. When there is a war and there is a military type of escalate, God, I have a bug flying around my head right now. Sorry if I sound a little strange. If you have this, if you have an escalation in a wartime type of escalation, now depending on how severe it is, any type of shock that you see in the markets, whether it's, you know, it's kind of a risk off type of move, those are always bought. I'm not a you know, sell military action, sell risk. I'm more of a dip buyer after a dip in risk. What do you guys think about that?
I think it's a very wrong period to do that, because there are now a multitude of reasons that the markets are headed down, and multiple threats for risk assets at the moment. And especially if the situation in Ukraine escalates even further, it's going to be literally like a perfect storm, right? Yields moving higher, while that's completely unaffordable, right? Because debt is not what it was in the 80s. Inflation remaining extremely high despite the recent hikes. Energy situation, especially for Europe, is a shitstorm.
It's a good point, Steve. It's a different environment.
Typically speaking,
okay,
we already have economies in a recession. So
right. Okay, I hear what you're saying. Well, I just realized we got about 3 minutes before Dale's interview. So different situation, not buying risk on any type of escalation. Got it. Yeah. I want to go around the horn really quick, because we're going to continue this conversation, you know, on the morning edge, which happens in about 45 minutes with the ForexAnalytix subscribers. So if you're part of the ForexAnalytix community, we'll see you there. You'll just click on this button here. You'll get to those private shows. But we have about 3 minutes before Dale has to take back over. I want to just ask really quick, what are you guys expecting today? What are you guys going to be buying today following the Fed? What do you think? Doesn't mean you're going to do it, but what do you think? Like, I'm going to tell you right now, for me, I'm planning on buying gold. I think gold's going to be a false breakdown. Gold has not given us as much of downside as I thought it would have on this breakdown of this major support. Post the FOMC, I plan on buying gold, especially if it's trading above 1690. That's my play. What are you guys thinking? Let's start with Ryan. What do you think?
Yeah, I'm going to look for the same old play. If some in the market see it as unhawkish, whatever the Fed deliver, and dollar dips, yields dip, I'm going to be looking to fade that move.
You're going to be buying a dollar dip today,
if given. Yeah,
if given. Okay, sounds good. Yeah. Steve, what are you going to do today?
I'm with Ryan.
Okay,
as I've said it before, I think that any reaction to the opposite direction, if we even get that, because for the CPI we didn't, I think it should be buying the dollar, selling risk.
Sounds good. Stelios, what are you thinking?
I tend to agree, but I'm ready to do the old Ryan trick, as in stop, close out, and go the other way with gold if it proves to be a false breakdown. But I'm
that's
not sure
what I said.
I know. I tend to agree with Ryan. When I mean Ryan, I mean what he does, right? What he does so well when he can, when something goes
reverse
the position. Exactly.
Got it. Okay.
So awesome. Basically, I agree with all of you.
Kman, what? God, you're such an agreeable dude. Like, yeah. I want to be there the day that Stelios picks a fight with one of us. That's going to be a day. I'm going to mark that one in the history books. Kman, what are you thinking?
I'd be careful with that. He's an athlete.
Kman, what are you thinking?
Yeah, sell euro dollar rallies. Sell the euro rallies. I'm buying whatever is far from my bet versus euro, like MEX, for instance, could be Canada in a way as well. And then choose your dollar wisely if you trade it. I'm not going to trade dollar yen before I hear from Bank of Japan, so I'm gonna completely stay out of that one. But yeah, euro yen. If we get a reason to buy yen, euro yen could break down as well. But I'm bearish euros for the time being.
Got it. Okay. And Dale, last but not least, what are you doing?
I like TLT, If they sell it off, I'd buy more. And that has me looking for a stop hunt above 145 in US dollar yen to get short after it's back under 45.
Wow. So you're going to be looking for one of those. You know, we had like a 3 drive that we were looking at the other day, and I forget what we were looking at it in, but that's going to be
they work sometimes. Like Stelio says, I've traded the 100th drive to a top a few times.
All right. Well, so everybody, I just want to say, you know, really good luck today. You know, if you're in the ForexAnalytix community, we'll see you in the chat rooms. We have a very active chat in there. If you guys haven't heard so already, I'm going to tell you right now, our prices are going from 119 a month to 189 a month. We haven't raised our prices in 4 years. They are raising at, you know, sometimes towards the end of this month, might be at the end of next week. We haven't decided exactly what date, but prices are going up. So if you want to be grandfathered in and keep your prices at the levels they are now, do what, you know, we have traders that have been with us since day one for the last 6 some odd years that pay less than 119 a month. We grandfather those prices in, and we keep you at those levels as long as you stay active. So that I just want to make sure everybody is aware of that, that our pricing is going to be changing. So take advantage of it right now. And a way you can take advantage of it is visiting our sponsor of today's show, the Trader Funding Program. If you want to join our community and learn how to trade our money and keep 75% of the returns and none of the risk, well, then check out the Trader Funding Program, and you get to be involved in ForexAnalytix in the community for a certain period of time. There's a 2-minute video right at the very bottom. Just watch that. It'll explain everything about the Trader Funding Program, and you can come prop trade with our firm. All right. With that being said, everybody, good luck today. Dale, have a great interview. And who do you got today?
I have Kevin Araujo. It's been a while since I've talked to Kevin at White Oak FX.
Nice.
And
all right. Well,
yeah, and I just want to add something. So besides the great content, everyone, if you're a guy and you've never had a child like me, this is your chance to be a grandfather. All right. Now, I know our content is good, but to be a grandfather is something you missed out on in life, and you can do it right here, right now. Everyone, become a grandfather.
The Dale dad jokes. My goodness, I love them. The granddad jokes.
I couldn't help myself. All anyway, right. Just call me Grandpa.
Thanks, Dale.
All right. So, Simon's saying I'm not helping. All right, Kevin, welcome back to F.A.C.E. I don't know how long it's been, but I will say it's been too long when I forgot your name and had to ask you again. How are you? Let me get you to unmute. Asking you to unmute, and a perfect day to talk to a professional like you.
Grandpa, how are you?
Hey, not too.
Has it been that long? What, over, I don't know, a year and a half? You always check in with me every once in a while, and I appreciate it.
Yeah, Kevin. So great to be with you on the Fed Day. You're going to be doing a little screen sharing today? Mm-hmm. Or are we just going to be talking markets? And
we can share the screen, yeah.
Okay. So, I went to your site just to refresh my memory, and I know a big part of your work, and probably be interesting to talk about, is the CFTC reports and commitment of traders. And, if you're gleaning anything from them going into the Fed, that would give you some biases after this event.
Yeah, big time. Yeah. Can you see my screen now?
No, it's at the bottom. It's
there we go, and boom.
Here we go.
Now you see my screen?
Got it.
All right. Yeah, there's been a lot of information that we've been getting from the CFTC reports, like incredible amounts. So, it pretty much started at the beginning of 2022. All right, when we had the invasion. The Russian invasion into the Ukraine.
Right.
And some really, really interesting things happened during that time. Now, listen, I'm not a conspiracy guy, but I just point out facts. All right. I just point out facts. I look at what's happening. I look at the positions that the banks are holding, and I look at what the media is saying out there, and I put everything together, and I just tell the story that it tells. And I will tell you that something really interesting happened with this whole lead up here in gold price. When you look at the CFTC data, you can clearly see that the big banks were piling into massive long positions on gold. All right.
They knew there'd be an invasion.
This is pre-invasion, right?
Oh,
yeah.
Right.
So the interesting thing is, as you know, you're well aware of that, you read any type of book and they tell you that whenever there's a time of war, you buy gold. That's just the thing, right? Everybody knows that. So the funny thing is that, when I look at my my data, which I collect every single week, and I compare, the previous week's data with this week's data, and I have data going back to, into the 80s and 70s on some pairs. So I collect the data and I color code them so I can see when they're aggressive with their positions and when they're not aggressive with their positions. And what I noticed was that the banks leading up until right here, let me show you. Okay. So February 24 was when the whole thing broke out. Okay. Right. And as you can tell, leading up to it, right, we went from 275, 279, 313, and then the highest amount of gold positions was February 22nd. They reported, okay, one of the highest in a long time. The previous time that we had 360 was back in November 16. So leading up to this situation, the banks were piling into long positions, all right? Yeah. And then after the news came out, they put in a few more long positions. And what that did was it helped fuel a move up on the charts because, February 24th is in this area here. So you see the large spike up here, Dale? Right. See that big spike? So that was all the retail traders reading the news and saying, oh my gosh, we're going to war. Let me pile into some gold positions. And so there was a big rally up. It came right back down. And then we saw this big spike up. Now, up at these highs, we had people like Goldman Sachs coming up saying, oh yeah, we see gold going up to 2,500.
Yeah.
Yeah, you remember that?
Yeah,
so everybody was thinking, okay, so we got a war. Goldman Sachs saying it's going to 2,500. Guess what happened up at these highs?
Banks are big sellers.
Well, yeah, because they accumulated such long positions, such a large long position. It's like this, Dale. After I've been studying the CFTC reports and the data for so many years, what I've been able to determine is that, when they get to a certain amount of positions, like right here on my spreadsheet here, I have marked up what's the largest amount of long positions they've ever held. Because I think that number would be a nice number to know. And it was 408,000. So I asked myself, what happens every time they get to those positions? Up in the 380s, 90s, 400,000. What typically happens? You know what typically happens? They take profits on those positions.
Right.
So it's almost like they're working within a certain amount of money or positions that they're going to be purchasing. And when they reach those maximums, you can't keep purchasing, so you're forced to sell. And I just think it's very, very interesting how they were already preparing by buying gold leading up into this incident that happened February 24th. And then when the banks needed retail traders to come in and take those long positions off of them, you have people like Goldman Sachs coming out saying, guess what? Gold's going to go to 2,500. And so after they did that, everybody and their grandma come in and they started buying those gold contracts. And this is what happened. They took it up to 2060, and they offloaded, the banks offloaded all those long positions that they had. And then boom, it's been all downhill since then.
So are the banks equivalent to commercials?
No, they are part of it, but they're not. And that's the big fallacy with looking at CFTC data. When you buy those books that are out there, and there's a few people out there that profess to have all the answers when it comes to CFTC reports and the data. And it's unfortunate because the thing that they're telling traders is that you should be focused on the commercials and not the non-commercials. And I can tell you from my experience, and listen, I haven't been doing this for 40 or 50 or 20 years, but
how many?
Just over 10 years now.
Okay.
Just over 10 years.
That's
This
pretty
is
good
this has been
history.
my life. This has taken over my
Anything you
life.
do for a decade is an important chapter.
Yeah,
So,
I've calculated about close to 40,000 hours I've put into this type of work.
okay.
And what I've been able to determine is that if you follow the commercial side, you're not going to do very well. You're not going to see the full picture of what's really taking place on the charts. If you
Yeah, I
follow the
was always
non-commercial,
early. You were because commercial. I always rationalize it that commercials have deeper pockets than retail. So when they had a huge position, um, you know, uh, they could afford to be early, and we can't. So that's what I got from following the commercials. I was usually early.
yeah, that's a good way of looking at it. If you want to time the markets the way that you want to time the markets, meaning you want to get in at the highs, get in, or if you're going to go long, you get in near the lows. If you want to time the markets and you don't want big drawdowns on your account, I mean, the big banks, they don't care. This is toy money for them. You can see it all the time when you track the CFTC data. You can see when they get into positions and how they don't care if those positions go into the red. And it could be for months that those positions go into the red, because sometimes they'll just put in positions into the market just to push the market in a certain direction to get retail traders to do the exact opposite.
Yeah, it's the old story of pros driving up a market so they could distribute and take down a market so they can accumulate.
Mm-hmm.
So what they doing here, Kevin?
Well, my friend, what they're doing here is I show you. All right. So if you take a look at the positions here, this is the latest data from September 13, and I'll point you in this direction. So here are long positions. We went from 310 to 225,000. Okay. So that's clearly they're removing their long positions. In other words, profit taking on long positions, right?
Right.
So if you look at short positions, look at from April 26, we went from 92,000, and I'll point out these dates here. The end of July. You see how many short positions they went from 92 to 148? That's drastic. That's a big move, okay? So
and
you ask yourself,
get a rally that didn't hold, right? On those numbers in gold. It rallied, gold rallied with the market.
Yeah, let me show you what's going to happen. This is pretty interesting stuff. Late July, Dale, and you're exactly right. Take a look at this, okay? Late July, what happened late July?
Yeah,
we have this here.
Yeah.
You see this here?
Yeah.
All those short positions that I just showed you on the CFTC data that are under the non-commercial, not commercial, non-commercial. Why is that so important? Because if you take a look at price overall, you'll see that price has been ranging, okay, all throughout here. This has been a massive range. Why is price ranging? Well, there's a lot of things that you probably don't have time to get into now, but the bottom line is that price was ranging because there was a massive area of buying here that the banks had, okay? And so in order for price to go lower on the charts, they have to remove these buying areas that they themselves created. And so what tends to happen is price will come down. Oops, let me just fix that. They'll tend to come down into the buying area, rally price up, down into the buying area, down into the buying area, until there's no buying happening here, and they remove it. But as this formation, this ranging formation was taking place, I'll point out something really, really important here. You see this trend line here, Dale?
Yeah.
Okay. So trend lines are used by the institutions. How are they used? Well, if you go into any bookstore and you look at, how trend lines are supposed to be used, there's a handful of different ways that people are to interpret trend lines. But one of the ways is that, the more tests of a trend line, the more stronger that trend line will become. Then when it tests, you buy. Yes, it happens. It does work. And, if you know what you're doing, you can make money using that. But the thing here is, Dale, is that if you take a look at this trend line and you see how it tested here, okay, this was an important trend line that a lot of people were watching, a lot of retail traders, as well as the banking institutions. So when price came right here, remember what was just happening? late July, the massive amount of short positions that the banks were filling. The reason they were allowed to fill in so many shorts is because there was somebody else that was buying from them. Right, Dale?
Okay. Yeah, it takes
If
two.
you're selling, you got to have a buyer. If the banks are selling, who do you think they want to buy? It's guys like you and I, all the retail people. So that's why they were able to fill in so many of those short positions. And so we located this area as a significant area of selling that the banks wanted to do, that the non-commercials wanted to do. And so what happened was when that price was testing that ascending trend line, a lot of retail traders were buying, the banks were selling to them. It caused price to drop. And as you can see, here was our area of buying, okay, these big green lines. This was the area that they've been holding for so long. We saw price come dip deep, so deep down to this buying area. It retraced up. And where did it retrace to? Right there. Why do you think they retraced the price back up there? Because that's where the banks were selling. So they weren't able to fill in all the short positions that they wanted to initially with this first drop. So they retrace price back up to that area, and then they fill in their orders. And guess what happened recently? You see that line being removed?
Yeah.
That's a significant move. That's telling me the banks are showing us their cards, and their cards are reading. They're not interested in holding gold price anymore. All they're interested in was taking profits on their long positions, filling in a boatload of short positions, and preparing for this to drop.
And still, they're still looking for more downside. There's no.
There's no doubt in my mind. There's no doubt in my mind. There's no doubt in my mind that they're looking to push this down further. I mean, when we look at the higher time frame charts, like I look at the 6-month chart, okay, and I can see that we have a move up, a down, consolidation here, and a move up. Okay, that surpassed the previous high. We have a trend line here. Now, this is an uptrend, as we all know, okay? Ascending trend line, the previous highs were surpassed. So you don't typically want to go against the trend. You know that, right? All your experience has taught you that, Dale. But there is momentum to the downside here. You know, we look at this last candle here, and it's a basing candle. And we see this big, long candle to the downside. That's a momentum candle. When we have basing followed by a momentum candle to the downside, it typically means price is going to continue going downwards. But the question is, it's going to continue going downwards, but what is it going to come up until? And the thing is, we don't have an institutional buying area located on this chart. All we have is this trend line to the upside. All right. Okay. All we have are these trend lines to the upside. So I have a target in about the 1500 area, because I figure once price get down here, I wouldn't want to even consider being short. Up at these early stages, I just got out of some short positions because of price stalling here near the lows. And I'm seeing a lot of signals to tell me that short-term momentum could potentially be upwards. So I figured I'll get out of my short positions and I'll just wait until the coast is clear and momentum starts to pick up again to the upside, and then re-engage. But once price gets down towards the 1500 area, I'll be looking to get into a long position on gold for a longer period of time.
Long-term buys down there.
Yeah.
Okay, silver's a little different story.
Silver, I don't really look at silver too much. The chart isn't as nice and clean as gold. We do have a really big institutional buying zone that just came into play. So longer term, I don't see any reason why it can't go higher.
Yeah. Okay. So is the institutional buy zone in that shaded area around 1850?
Yeah, the green area on the 6-month chart.
Oh, okay. On the 6. So that's anywhere from 12 to 16.
Yeah, it's a big area. So the fact that a 6-month area came into play, you know, you got to consider every candle 6 months. So we could have basing right here, which is what it looks like it's creating. So we can have until the rest of the year where we're just staying in a range. But once I see signs that there's a breakout from this basing area to the upside, then I'll be looking on the lower time frame charts for that momentum to continue to the upside.
You know, the white stuff goes first.
The white stuff goes first?
Yeah. Silver's white.
Oh, yeah, that's
uranium.
Yeah, I wouldn't be surprised to see that.
No, that's yellow cake. Platinum's white. So the white stuff goes before the yellow.
That's interesting. I never heard that. That's
Okay,
good to know.
so really some nice looks. Any other market that you want to cover with your dad? It's really great to have you back, Kevin.
Yeah, well, thank you
It's
again
not
for
letting
having me.
get you right back into the rotation. So, sometimes I forget to do that, and then you fall through the cracks. So I'm glad I
That's
reached out.
okay. You're a busy guy. You've been interviewing a lot and doing a lot, so I appreciate you having me
Okay.
back on.
Well, you got some agreement from the audience. Someone's talking gold 1420.
Yeah, I mean, it's all pointing at the direction. When institutional buying areas get taken out and the institutions are filling in massive amount of short positions, that's all I care about. And one of the other things that I like to look at is the news. I love to look at the news because, just late last year, I made the decision to start trading the stock market. I used to trade it back in the day. Then I just focused on the currency market, gold and oil. But I saw so many opportunities over the last 2 years, Dale, with pharmaceutical companies, and the market just blew up. And I looked and I said, why are you not taking advantage of these opportunities? So I started doing some work on the markets. And when I started using Yahoo Finance to dig into who was owning these corporations, and because I'm trying to do some research, I'm trying to figure out why.
So you're looking underneath, so you're going to be looking for insider buying and things like that.
Insider buying, and I want to know why price is doing what it's doing. That this is the one thing I always try to focus on, is why is price doing what it's doing. And when I start digging into who owns all these the majority of these big corporations, I saw that two major companies own them, BlackRock and Vanguard. I'm thinking to myself, well, that's kind of crazy. I mean, these guys own everybody. When you own the banks, and you own the pharmaceutical companies, and you own the media companies, it's like, wait a minute. Okay. So if I own the banks, and the banks are the ones that are moving the markets, and the banks are the ones that were getting into gold near the highs, and I also own all the major media companies, then that means I can spin the headlines whatever way I want. And I got to thinking, and I was like, are they spinning the headlines in a certain way so that they can lure retail traders into doing the opposite of what they actually want them to do?
Oh, that would be mean.
Ooh, wouldn't that be? And so I've been tracking
Someone's saying, and guess who owns BlackRock and Vanguard?
Guess who owns them? Well, I know Vanguard owns BlackRock, and the owners of Vanguard is very difficult to pinpoint, but I mean, you can just do look back through history,
right?
Yeah, it seems like that.
The Bilderbergs,
Rothschilds,
Jezrin said the mafia,
the Morgans, all those characters that run the
Nancy
Federal
Pelosi,
Reserve.
someone's saying.
No, not Nancy
Jerome
Pelosi.
Powell.
No, they're just little puppets. Those guys, they don't have family money like these other guys.
So, are you trading individual issues now?
Excuse me, sorry.
In stocks.
Yeah, I trade the stock market. So I'm looking at the S&P, right? If in order to buy stocks, I got to know that the market's going to rally. And I haven't seen any signs that there's going to be a market rally. In fact, everything is pointing in the direction that, longer term, we're going to be seeing a drop. So again, when I look at what the news is saying, and I look at what the positions on the banks, I can pull that up as well. Take a look here, S&P. Okay, this is the S&P 500. So if you take a look at long positions, you see how all these numbers here, longs, are cooled off. Or I shouldn't say cooled off. They're blue, I should say. I set up this spreadsheet so that when the columns are blue, that means the positions are cooled off, which means the banks are not really focused on those positions.
Okay.
When they turn red, that means the positions are aggressive. That means the banks are focused on that direction. So when I look at longs and I see the coloration of the cells being blue, I know the banks don't really care about, long positions in the markets right now. I look at the coloration of the cells under short and I see red. Not only red, but it's becoming darker red, which means they're becoming more aggressive with their short positions. So all the indications is that price is dropping, okay? and they're preparing this for a long time. And they don't change their direction on a whim. They take, months, sometimes years to accumulate a
time
position.
to turn a battleship around.
Yeah, exactly. Right. So, when they spend a long time to accumulate something, they're not going to change their mind in a heartbeat. So everything is pointing in the direction that the market is going to continue lower. And when we look at the what's happening on the charts, technically, we see that back in early 2022, and again, these zones were created just around the war. Okay.
Yeah.
So big drop. We saw this happen right down here. It rallied back up right towards the selling area, and we're seeing it come back down again. The only thing is, I would not say it's going to drop immediately, okay? Because when we are taking a look at the trends that the banks create, and yes, the banks do create trends, we have a trend line coming down here, but we don't have a downward trend on the weekly chart. Why don't we have a downward trend? Because institutional selling areas that would typically be used to hold price and propel price to the downside, they were removed. So yes, there's a trend line, a descending trend line, but a supply zone can't be removed in order to keep a downward trend. So right now, price is entering into ranging like this. So what I'm really focused on, Dale, is looking at the daily chart and looking at this ranging that we're just heading into. And once I see signs that a downward trend is going to be formed to break out of this ranging, then I'm going to be looking in, taking advantage of a move to the downside.
And it looks like your chart, and we'll wrap it with this on the upper left-hand side, your monthly has some shaded areas and a trend line around 3,000, which is a lot of people's targets for this bear market, 3,000 or the pre-COVID high. So I tell you what, great insight into what's happening in a couple of markets and valuable information. Kevin, why don't you show your website so people know how to find you? And you could find them on Twitter at White Oak FX. That's correct, right, buddy?
Yeah, it's whiteoakfx.com. You can find out what we do, what we offer, the analysis we offer, and all that stuff.
Are you Sherlock?
Sherlock is the system that we created, how to read the markets and so forth. Yeah.
Yeah, I like it.
Yeah, thank you.
So Kevin, great to reconnect with you. And
yeah, thanks so much.
And really appreciate you coming here and sharing that hard work. The takeaway from the interview was the amount of hours that you've spent in the last 10 years developing your insights with following the money. And that's hard work. I say, trading is hard work, and you have to live through adversity. And if that scares you, do something else. Well,
exactly. Yeah.
You show you're not afraid of the work. So
well said.
We appreciate
thank
it.
You.
I'm rooting for you. I'm rooting for you, my trading warrior brother.
Thank you, Grandpa. I appreciate it.
All right. Well, okay, son. And great having you, Kevin. Thank you very much. And everyone, there you go. White Oak FX, find Kevin, follow him, and check out his website and learn to see what's happening underneath the surface. That's where all the market tells are.
Thank you, sir.
Thank you,
Have
Kevin.
a great day.
All right, so that's a wrap, everyone. You could join the team in 15, 17 minutes for the morning edge. Good luck with the Fed today. Remember, you don't have to do anything, and that the markets will be here again tomorrow. Make sure your equity is. And don't just count your pips, count your blessings. Adios, my trading warrior brothers and sisters. See you guys tomorrow. You're welcome, everyone.